Both candidates have laid out varying policies with a similar bottom line. There's going to be a bit more spending. Earlier this month, we had a chance to speak with Gary Coney, joins us on set, the former director of the U.S. Economic Council under former President Trump. And Jason, I want to play what he had to say about growing the U.S. economy and then get your reaction on the other side.
I happen to like the pro-growth, the reasonable but sensible regulatory economy that we had during the Trump administration. I think this overly protective, overly restrictive, highly regulatory economy that the Biden-Harris administration has is not beneficial to growing GDP.
All right, Jason, I know your view probably differs just a little bit. You had an op-ed in the Journal not too long ago saying Vice President Harris is a safer economic choice. What's the biggest threat, do you think, from former President Trump?
Yeah, first of all, by the way, it's not just me that disagrees with what Gary Cohn said. The stock market disagrees as well. It's gone to new heights, extraordinary growth. And, there's some regulations I've seen that I don't like, some that I do like. But on balance, they're just not killing the economy. Going forward, I think it's Donald Trump who does pose quite a risk to the economy. If he follows through on his across-the-board tariffs, he's talked about 10%. He got criticism. He changed it to 20. Recently mentioned 50. That just would unleash a trade war, shrink exports, shrink imports, raise prices, lower jobs. Terrible idea. The Fed, I don't think he can undo and destroy it in a 4-year period of time, but him plus a successor in 8 years, maybe could. And it's such an incredibly important institution. I would not want to take any chances with it. And finally, on the budget, just about every analysis that I have seen, nonpartisan ones, even conservative ones, have found that Donald Trump's plans would spend considerably more than Harris's would. And by the way, they're not pro-growth, exempting overtime pay plus Social Security benefits plus tips, et cetera. That's not the way to have a broad tax base with low tax rates to foster economic growth.
Jason, at least when you look at some of the betting markets, it does seem like the market is optimistically pricing in a potential Trump presidency. What do you think the market is missing if there is kind of some optimism under the hood and outwardly from certain high value members of Wall Street talking about how they are excited to vote for Trump come November?
Yeah, I'm a big believer in betting markets. I think they're a great way to aggregate and share information. They have moved more in the direction of Trump than I fully understand. The polls have moved a little bit in his direction in the last week or two. The betting markets even more so. So I don't fully understand that. But I think more importantly, there's a lot of businesses who think he doesn't mean what he says on tariffs, on immigration, on government spending, on the Fed, and they might be right. But do I think there's a 20% risk that he'll do what he says? Yes. Do I think a 20% risk times a rather large event for the economy is something that goes way beyond a tail risk and is worth paying attention to? Yes, I do.